welcome, world, welcome. We are at episode number 2, Stocks is Talking podcast with Ib and Getz. I'm your co-host, Ib. Getz, what up?
What's going on? Episode 2, let's get it.
Episode 2, I'm excited. I hope you excited. Last week, we got into a lot of heavy stock talking, actually. We talked IPOs. We talked about options. I'm feeling like I want to kind of pull it back for the people. For the beginner, someone that's never traded a stock a day in their life, but they're interested, where do you start? That's kind of what I'm feeling for this episode, at least to start with. Then we'll see what happens with it. But I definitely want to take it back a few notches. Are you okay with that?
I'm good with it.
You good with it? So let me get right into it. Volume, 52-week highs and lows. Volume, 52-week highs and lows. When you hear those terms, what are your thoughts?
Volume. When we're talking about volume, we're talking about how a stock is traded on a daily basis. You know, we're talking about how many people are in the market are, trading that stock.
Okay.
So you want to look at, what the average volume is on it, because it's going to show you, when you see these spikes in volume, or you see, the volume's really low on a day, it's going to give you an idea of what you want to do with it. How you want to trade it. Is there news? There's a bunch that goes into it. So, but volume is a tell. It's just it's one of the tells. So
it's a tell. So when you say a tell, what you mean a tell? Something that's kind of giving you an example of what to do? Is it?
Yeah, it's like there's something going on with that stock. So if you're looking at a stock and you see a spike in the volume, all right, why is there a spike? What's going on with this stock? So, maybe that's that could be one of the things that helps you in this research phase of you picking the stocks that you want to trade or invest. Probably more on a trading side if you're going to do volume. And then 52-week high. Talking about 52-week highs, lows. I mean, tell them about it. This is something that I think you could explain a lot better than me. So you get into it.
So here's what I'm thinking. When I think 52-week high, when I think 52-week low, I'm thinking a possible entry point. If it's at its 52-week high, I'm thinking I want to bounce in because now it's breached a certain level of resistance at the top. So if the stock is, let's say, $10, the 52-week high is $9.95. That tells me, this thing has now surpassed what the previous yearly high was. So now it might be on to new pastures. So I'm going to consider buying it. It doesn't mean it's a definite buy. It means that's a strong indicator. An indicator is a good word. We threw out a couple terminologies for you. We threw out 52-week highs and lows. We threw out volume. Indicator is a huge tell when it comes to stocks because indicators can be a bevy of things. It can be the volume of a stock. It can be the 52-week high or low of a stock. Indicators help give the investor knowledge that will push them forward to a decision. That'll either support their claim or resist their claim. If you're thinking, hey, I want to buy a stock because I think it's going to go up, and you have indicators that are telling you, there's low volume. Right now, the stock, it just breached its 52-week low, which means it might drop lower than that price point. That's telling you, it's not a good time to buy, potentially. It's a time to wait and see because it's surpassed the previous low. These are indicators, people. Indicators what make intelligent traders and not so intelligent traders. The difference between the smart money and the dumb money, and if you don't know what I'm talking about, check out episode 1, where Getz got into smart money, the investors, quote unquote, the institutional investors, and then your dumb money, which is the retail investors, the little guys, the Ibs and the Getzes, and all the other small people. And again, like I said, we're here to break that stigma because we're the smart money as well. Why are we the smart money? Because we have indicators like the 52-week high or low, like volume. Now, when it comes to volume, and you touched on some great points, Getz, you made some You jumped out there with a few keynotes that I actually wanted to bring up, but you took them from me, so appreciate that. One thing I wanted to talk about was volatility. Volatility, is when a stock is trading all over the place in one day. Are you familiar with volatility, Getz?
I am very familiar.
And not to stray off paths, but Tesla is one of the biggest volatile stocks because they will go from $700 to $634 in 20 seconds. And that's not a joke, people. This stock will move quickly because it's high volatility. Volume encourages volatility.
Right.
Tesla has a high volume, right, Getz?
It does.
On a consistent basis. When I say high volume, I'm talking in the millions. Every day, people are trading Tesla back and forth. These are just facts. That volume indicates there are millions of people every single day trading the hands of the Tesla stock. Because there are so many millions of people trading hands, this stock is now highly volatile in terms of it will jump up, it will jump down quickly, and I'm just going to throw this nugget out there. The news will affect a volatile stock very quickly. Unlike a stock that has low volume, there aren't a lot of people buying and selling. So news isn't going to make a big deal. A stock like Tesla, if there's news that a Tesla car malfunctioned, that news is going to make the stock move because it's highly volatile. Now, a company you've never heard of that's at $4 a share and nobody knows about it could have some crazy news that came out because there's already low volume in the stock. You're not going to see much movement. If they report good earnings for a day, you might not see huge movements because there's low volume for the stock. Now, if some breakthrough happens and this health company now has a COVID cure, that stock that was $5 may become very volatile because millions of people may want to go in and buy this company that they just heard President Biden talk about. Does that make sense, Getz? Or am I going too far into the weeds right now?
No. It makes a lot of sense. You know, and we got a few other things we probably want to cover. You know, so
here's my point, though, Getz. My point is, we're here to not just chit chat about what we're doing. We're here to give some knowledge for the small time investor to become the smart money investor.
Right.
And we have our ups and our downs, but we take the knowledge we've learned to try to increase our wins and minimize our losses.
Risk management.
Another thing, risk management is so key. Not to get too off topic, risk management is everything because you don't want to become an emotional trader because your risk management goes out the window. Guess what do I mean when I say emotional trader? Ask me what I mean by that.
You tell what do you mean by emotional trader? What is risk management?
Hey, guys, thank you for asking that. Now, when it comes to risk management and emotional trading, as I just mentioned, risk management goes way out the window because risk management is minimizing your losses. Let's say you jumped into a stock, it's now dropped down $2 or $3 since you bought it. You're losing some money. You don't see any positive news coming out. You want to cut your losses. You want to sell that trade. Hold on to some of your principal, which is the initial money you put down, and go look for that winning stock. That's called risk management. However, when you become an emotional trader, you make a trade and say, you know what? I've been watching this stock and Cousin Billy told me it's going to take off. I buy it. It's now dropped $5. But you know what? Cousin Billy told me about this. He's never wrong. I know it's going to work out. There's no news coming out about the stock. They're not doing any new innovations, which we talked about in episode 1. Nothing is coming out about the stock. However, it continues to plummet. It's now dropped $10. But you say, no, it's going to come back. And next thing you know, 2 weeks later, your account is blown up, meaning your account now has a zero balance because you stayed into a stock too long when the indicators told you to get out a long time ago. But if you're an emotional trader that goes off of what Cousin Billy said and not what the indicators tell you, you will blow up your account every time.
Now,
every single time.
what do you do for your risk management? How do you plan your trades?
So how I plan currently, I'm setting stop losses. We're getting a little advanced, but you asked me a question and I'm going to answer it truthfully and honestly. I set stop losses, meaning that if a stock that I just bought drops to, let's say it drops $2.30 from when I bought it, my trade is automatically going to sell for me because I put in a stop loss, meaning I want to get out if it hits this point. So that's my biggest risk management position right now, because I can save myself, Glitz. I can save myself from myself because I have been that emotional investor that says, you know what? No, I've heard nothing but good things about this stock. It's going to go up. I saw that it went up a month ago and cousin Billy made $300. So, you know, I know I'm losing right now, but it'll come back. The next thing I know, it doesn't come back. Now I've learned through training and life experiences, my best risk management is to put the stop loss in right when I execute the trade. And you can execute a trade and set a stop loss at the same time. So now I know I've set my stop loss at a price I'm willing to lose. I'm willing to lose $200 on this trade. I won't be too upset. Now that emotional trader, that same 200 you could have lost, you've now lost 600 because you were banking on what cousin Billy did a month ago and you refused to pay attention to the indicators. Sorry to go back, but let me bring it back to your point. My risk management, I'm setting stop losses. Now that's something we'll get into in the future. I promise you, audience, we are not trying to bore you with these nuanced terms, but we're going to slowly guide you there to the point where you're going to be telling your friends about the stop loss you just set for your stock.
Now,
so we'll get there. We'll get there, guys. Go for
it.
Right.
Now, the one thing I want to say, just to kind of segue back into the research, we bring up all these terms, and if you want to bring it back to the research point of it, you know, you have all these resources available to you, and we'll get into it a little bit. But one of the greatest resources, just to teach you the terminology and teach you what these things are we're talking about, is Investopedia.
Oh, you took it to Investo? Yeah, I just coined that term, Investo. that's my biggest. That's my man right there.
Yeah.
But go for it. I don't want to cut in.
Yeah. You know, it's where you want to. It's a way to begin your journey. You can get on there. You can learn all the terminology that we're using, and then you can move from there. Because you could go to all these other platforms to do your research, and you may hear some of these terms, but if you don't understand them, then it means nothing.
Nothing. You're absolutely right. Investo is one of those. It's one of those ones I always go back to when I'm reading an article and I see a term in a Wall Street Journal. Like, okay, you got me right there. But let me go back to Investo and see what it means. So now when I see that term again, I'm familiar with it. I'm now following the lingo.
Right.
But go for it.
So
what else we got for them?
Well, now that you're in Investopedia, you're learning all your terms. Now, lately you've been hitting me with a lot of different places to get your research from. I think you should dig into a little bit of some of the places, you know, that some of the things you found as far as for research.
So here's what I'm doing. First and foremost, I'm going to Yahoo Finance. Yahoo Finance is where I'm going. Is to see if there's any major news. I'm kind of looking like headline news. I'm going to Yahoo Finance. Yahoo Finance is where I check for my 52-week highs and for my volume. It's a great resource to use, but it's only one of many, as Getz mentioned. I'm also using FinViz. That's FINVIZ.com. Hey, Getz, I know this is the first episode, but all these companies we're name dropping, in the future, please feel free to become primary sponsors of the Stocks is Talking podcast with Ibn Getz. Investopedia, we'd love to have you. Yahoo Finance, we'd love to have you. FinViz, we'd love to have you. But FinViz, what I like about them, they will break up the stock market into segments. So if you're like, hey, it looks like technology is kind of booming right now, I'd love to buy a stock in technology. Well, you go on to FinViz and it will break down sectors for you. So if you're interested in technology stocks, it will be grouped separately of all the technology stocks. And then you can break those stocks down into subsectors. If you're interested in pharmaceuticals, because right now, COVID is the biggest news grabber right now, especially here in the US. I know we have listeners all over the world, but here in the US, COVID is still a thing. So any pharmaceutical company that's coming up with new COVID vaccine trials or anything related to COVID, they're kind of sizzling potentially. So you might think, hey, what are the pharmaceuticals doing? What are there some good companies that are in the green right now? In the green meaning they're going up. Let me check one. Let me see if there's a stock that's at $3 currently, but they're working on a phase 2 trial of some COVID vaccine, and now they're waiting for FDA approval. At that point, that's when you buy the rumor, because the rumor is that they're waiting for FDA approval, or it's a fact because they are waiting for it, but the rumor comes in terms of if they end up approving that stock, the FDA, now that stock is going to go up. It's going to take off, and what do you want to do, Getz? You want to sell the news. Because as you mentioned in episode 1, buy the rumor. The rumor is this new company is working on a trial vaccine that might get FDA approval. The news is new pharmaceutical company just received FDA approval. That's when you want to sell, according to the analogy, buying the rumor, sell the news. That's a perfect example of it. So my point is, with FinViz, you can break your research down into sectors that you think are cool stocks. If it's electronic vehicles you're interested in, that's the new booming thing, FinViz will break that into a sector. So do you see the value in that, Getz? Because that's something that I'm using on the consistent. Have you tried it yet?
I have. And you know what? One thing you didn't mention about something like FinViz, and there's a few other that do it as well, is the screeners.
Ooh.
You know, and when you get a little more advanced and you learn the terminology and everything, and you go into these sites and you have these screeners you could set up to only look for exactly whether it's your volume or your 52-week highs, your volatility, you know, the trend of the stock.
The trend.
You know,
when you say the trend, what we mean?
We're talking about whether it's trending up, whether the stock is green, it's going up higher, or it's trending down. If it's selling off, you know, the price is going lower. You know, you can set all these things. You know, when you go to these places like FinViz, and there's a few others. You know. And
here's why we're telling you. I'm sorry, go for it, Getz. I don't want to cut you off. A lot of the listeners said I cut you off too much in the first episode. So I'm trying to pull back, people. I heard you. I'm listening. I hear what you say. I'm bringing it back. So I hate to cut you off. Please continue your point.
No, you just say you have these tools in front of you. You set it up. You set it how you want it, and you can just go from there. And it narrows the scope. You know, so instead of you looking at the whole broader market, you narrow it down, and it makes it easier for you to go after exactly what you're looking for.
So you're becoming a sniper in the market. You're pinpointing exactly what your target is because you have indicators and research at your side and at your sites. And that right there is invaluable for a beginner trader that wants to make some money in the markets, or at least get your feet wet. Because please understand, we all lose money, we all make money. I've been there, Getz, I know you've been there. And we're going to get into those stories of how we lost. I think we talked about the Facebook IPO last week. We bought in and it dropped immediately. And we sold at a loss. These things happen, but the more indicators you have available to you, you become a sniper because you get to narrow the scope.